Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, March 2nd, 2025. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. I want to get you guys caught up here. First I want to show you guys our auto trades, which is here. You click on this. That's our landing page with Stryker, who does the trades. Here are the daily results. And this is from Friday. You can see our triggers and targets. Had a couple wins there. The regular E-minis are worth 10 times the micro E-minis. We had a couple wins on there. Okay, so without further ado, I want to get into some things here. But first I want to say it's been about a month since I've published a report and had some hard issues. Had a lot of procedures and tests, and actually, I have another test tomorrow, Monday. Definitely have a heart surgery in the coming days or weeks after that. So we'll get in as many as we can before we're out with heart surgery, but been very busy with those health issues. So my apologies to you guys. But let's start off with the S&P weekly here. We got two different wave counts. We have one in black and one in purple. We have this megaphone or expanding triangle for wave 4 here. Let me unoverlap those things. And the black count has wave 5 up here, an A down, an expanded flat B, higher B, and then C would actually come down below the wave A low. Okay, the purple count here counts as 3, 4, and then subdivides 5 into 1 in parentheses, 2 in parentheses, and 3 target was here at 61.18, and so far the high is 61.47 on February 18th, so it overshot it. And within that third wave in parentheses, wave 5 gained equality with 1 at 60.69, so it's overshot both of those. We'll see how that plays out, if that ends up being the B wave or the purple wave 3 high. But it appears to be coming off of that top. We'll get more into that when we get to the lesser degree of trend, which we'll start doing right now. Let's look at the S&P hourly chart. Here we go. Okay, this has Fibonacci turn dates on it. I'll get more into that later. We had that Fibonacci turn, well, we had a lot of them before this. Again, we'll cover that. But we have an expanded flat wave 2 high here. But from 219, we've got a 1 down and a 2 up. And here's where 3 equals 1. Let me make that bigger. Okay, and there is where 3 equals 1.618 of 1. Down here, 56.23. Okay, we have another turn date coming up on 36. This is a hard bounce here. We have another count, which calls this as a 1. I can get into that when we get into our reports, okay? But that's what we're looking at there. A 5-wave decline, an upward retracement. Looks like another 5-wave decline. So it would be a series of 1s and 2s over here. We'll get back into this all the way before 131 in a little bit, okay? I want to get to the E-minis, and let's see if we can find that that daily chart of the E-minis. There it is. Okay, this one here makes it real simple. We're looking at an ABC. A down, B up, C down. Okay, C equals A here at 57.96. The low on the 28th was 58.48. That could be it. It could stop short, or it could go down to here. We'll see what the next week brings here. Okay, but that's what we're looking at. An ABC for A, an ABC for B, and this should be a 5-wave decline, making this a 3, 3, 5, down, up, down, A, B, C correction. Okay, I think I may have the 1.618. Yeah, that's 55.68 and a quarter down there. Okay, that's it on the daily. Let's look at the hourly if we can and squeeze it down a little bit. I think we'll take it from that 61.66 high. Yep, there it is. There's a Feb 19 61.66 high. Okay, we've got a couple different wave counts here. We have a red and a black. The black one shows a 1 down, a 2 up, and then a 1 down and a 2 up. Okay, where is it wrong? This 2 up can't go above 60.2375. Where is it right? When it moves below the wave 1 low of 58.48, that would mean wave 3 here in black is in play. At the larger degree of trend, we have a 1 in parentheses down, a 2 in parentheses up, 3 gains of quality with 1 at 57.93.50, and the 1.618 is there at 56.51.25. The red wave count has this third wave here extending, where it's a 1 down, a 2 up, and this would be within this larger degree wave 3, a 1, 2, 3, 4, 5. It counts perfectly. So that would be 3 and then 4 and then 5 down here at that 58.48 low on the 28th would make the larger degree wave 1. Then we'd have wave 2 up. And we can get those targets here. I've got 2 different retracements, one for this decline into this 1 in black, and one to this decline with the 1 in parentheses in red. Let's deal with the 1 in red first. The 382 is 59.69.75. The 50% is 6007.25, and the 618 is 6044.75. We're going to find out on this correction, excuse me, which one of these counts is correct, if this third wave extended or not, depending on how high up this retracement goes before it goes below the 58.48 low. Okay, on a smaller degree, right here, this 5-wave decline, which is 1 in black, or should I say the black, it's already at, there was the 382 pass, there's a 500 pass, there's the 618 pass, and there's a 786 at 59.86 and a quarter, and it's just between the 618 and the 786. So it looks like this extended third wave in red is more likely to play out based on this move up, which sure looks like a 2 to me. Okay, so that is our ES hourly. Okay, I want to get into our well, we'll get into the other indexes here first. Okay, let's start with the Dow. Okay, we'll make that big screen. There we go. The Dow sports 5 waves up from the October low. We're looking at the blue wave count. 1 up, 2 down, 3, which was a 1.618 multiple, 4, and then 5. And we had our targets here, and you can see the high so far is still on that 12.4. It overshot them both by a little bit. Okay, so that's what we're looking at there. The retrace targets, the 382 is at 38.816, and that would put it at the 4th degree, the 4th wave of 1 lesser degree of trend. That would be a normal retracement of this 5-wave advance to come to this 4th wave low. If it goes further, the 50% is 36.887, and the 618 is at 34.959. We can get into that with those reports that we will go over. Okay, let's look at the let's look at gold. Okay, we've been all over gold for quite some number of years. That there's so much to show on here, but what we're going to look at, let's make that a full screen for you guys. There we go. Okay, we'll go from the wave 4 low down here. We have 105, then we have 205, another direct hit, then we have 305 up here on 1031, 405, and here were our 5 of 5 targets here. We had 33, 34, 3001, and the high so far is just under it at 2956.15. It still may grab one of these. We're looking at 3,000 gold. We've been looking at it for a while. We've been all over this going all the way back to 2015. But this is the 5th wave. So we'll know when it's done. We'll watch this this decline on a lesser degree of trend for our monthly subscribers and analyze that and see if this is going to go higher or if actually going to correct this 5-wave advance. Okay, let's go from gold. Let's look at the U.S. 10-year, one of my favorites, okay? Maybe my all-time favorite. I've been loving doing the bond market for so long, so many years now. Let's make this full screen. We've got so much going on this chart. But we've got wave threes at least 3 degrees of trend on this chart. We've got the Roman numerals. There was a 1 back here. There it is. That's from the year 2020 low, and this is cycle degree. And we've got a 2 down here. And then within wave 3, we've got a 1 up with a circle, a 2 down with a circle, and wave 3 in progress. Within that wave 3, we've got a 1 up and a 2 down. I'm sorry, a 1 in parentheses, a 2 down, and within that, we've got a 1 up and a 2 down. Okay, like I always say, where is it wrong, where is it right? Okay, so if this is a 3rd degree at 3 or 4 degrees of trend, where is it wrong? This wave 2 here cannot go below the start of this wave 1, which is down here at 4.126. It's close, and it's reached the 786 and then some, so when it knocks that out, that tells us this isn't a third of third wave, okay? And we'll do those adjustments later on when it happens, okay? Where is it correct? If this low holds or does not go below the 4.126 and takes out this wave 1 high, which is 4.806, okay? Then we're looking at the next upside targets, which are pretty steep, okay? So for this 3rd wave in parentheses, again, we've got a 1 up here and a 2 down in parentheses. 3 equals 1 at 5.032%. That's the initial target because 3 should at least gain equality with 1 and usually does a 1.618, okay? On the bigger degree of trend, this 1 with a circle and 2 with a circle, wave 3 equals 1 at 5.367%. And the even larger degree of trend with the Roman numerals, 1, 2, 3 here in green is 7.255, okay? Those larger degrees of trend targets, if you will, stay in play even if the smallest degree of trend is broken, okay? You would need a break of this low for this wave 3 in a circle to be negated, okay? So really bears watching here, okay? Get that over there. It's a little bit crowded. But we always ask ourselves, whenever we make a trade or whenever we make a chart, where is it wrong? Of course, also, where is it correct? But more importantly, where is it wrong? That's where traders put their stops. That's where it's like, okay, this can't be too, it went too far. So we'll see how that plays out. It's getting pretty darn close to negating that third wave at 4 degrees of trend, which is very rare anyway, so wouldn't be the end of the world if this broke it. It would still keep the larger degree trends alive and working. Okay, now let's go from the US 10-year. Let's look at Tesla. Okay, let me make this a bigger screen. Okay, by the way, Tesla did, I believe this was a 786 Fibonacci retrace, and if we go back in time, this was a 780. Yeah, there it is there, C equals A. So from that 4th wave triangle, which I love spotting 4th waves, we had a 5 up, and then we had an A down, a B up, and a C down, which was a 786 retrace. There's no better entry than a 786 retrace because it can't retrace more than 100, okay? So this thing was an unbelievable entry spot. It couldn't go below here, okay? And what did you get out of that? You got to move from 101 to 299. That's pretty good. You put your stop below there, and you're off to the races. Okay, so that was 1 up. Then we had a 2 down into the April 24 low, and now We got a big move up. Let me just focus on that. A lot of lines in here. Apologize for that. But we had a 1-2 in blue. We had wave 3 targets in blue. And unless we label this wrong, this went past the 4.618, which isn't surprising because Tesla and Bitcoin, for that matter, do all kinds of 3 and 4.618 multiples, okay? So after it went up to this high here on December 18th, we've had a pullback. You can see A down in red, B up, C down here. And you can see that, boy, this is a little bit crowded. But so far that low right there is at 273. It might even be lower than that. Yeah, that's, no, 273. That's it right there. Okay, and that's the ABC. And that is these red lines here. There's the 382 at 365. It went below that. There's the 50% at 328. It went below that. There is the 618 at 290. It went below that. And here's 786 at 236. If this goes down there, it's a screaming buy because it's already done 2 786 retracements. This would be the third one. It could be over here. The retracement could be over between the 618 and the 786. But look at all of that congestion right there. Okay, that should hold it. So we're going to watch Tesla. And it looks like it's approaching a pretty good entry as it's gone down from 488 to 273, and the 786 is at 236.17. So we'll keep an eye on that. I do the monthly updates on Tesla, Bitcoin, XBI. I think there's 4 different stocks and or indexes I do in the every month in the video on demand, or video updates. Just did one because it was the end of the month just the other day. Okay, let's go from Tesla. Let's look at Bitcoin. Why not, right? Let's do that here. We haven't done anything in a month, so we might as well give you guys a lot of information here, right? Okay, we have wave 3 up, which has 5 waves within it. Let's see if I can get that big screen here. Okay. Here we go. Let's put it down. Okay, we've got a 1 up, a 2 down, a 3 up, which was a 2.618 multiple, a 4 down, and a 5 up. We had a target of 109, 356. I'm sorry, we had a target of 108, 307, and the actual is 109, 356, and you saw what it did after that. Okay, so on Bitcoin, the 382 is just below it, 73,217. And the 50% is at 62,054, and the 618 retrace is at 50,891. Notice, I always say the common thing with Elliott wave retracements is it'll go to the 4th wave of 1 lesser degree of trend. Here is the 4th wave of 1 lesser degree of trend. And look at all these targets. The 382, the red line, the 50%, and the 618 are all within that 4th wave. Any one of these would be a great retracement target. We'll have to watch this decline play out at a lower degree of trend and see how that goes, but looks like that would be a good place for it to bottom, end the decline, and reverse higher. So again, we'll watch that. Okay. Let's see what else we have here. I think that's about it. We'll do in video. Why not? Right? Let's make this even longer. Longer video. I want to really focus on this. We had a wave 4 down here. We had a 1 up of 5, a 2 down, and the 3 target was 155.85, and it didn't reach it, and it just missed it by less than 2 points. And it's turned back down, okay? So can't call this a truncated 5th because the 5th wave in red did go above the 3rd wave high, but it may have reversed. We're going to have to really watch this decline, see where it goes. Obviously, if it takes out this August 5th low, it's very bearish, and we'll look at the longer degree of trend. That means that's not a 3. Okay, and actually it's probably not a 3 because here's the 1, and this would be the 4, and it's below the 1, okay? So unless that's an ending diagonal triangle where 4 can overlap one, it's going to be wrong. So this looks bearish to say the least. We'll have to refigure that wave count before the next report. Okay, and speaking of reports, let's get to our March monthly that we put out. And a lot of this might be review from the charts, but I want to keep you guys up to date. There's our auto trades. Okay, by the way, the details, obviously I'm the developer. We're using our triggers and targets and Fibonacci extensions and ratios and Elliott waves. Got to have a trading system, got to have a money management system. I found out over the years you can have a trading system and you have to have discipline. And if you don't have discipline to the trading system, you're going to lose. And more importantly, even if you have a money management system and you don't have the discipline to stay within the money management system, your account's probably going to go to zero, as in $0. You have to manage, you have to have money management, period. It's more important than the trading system. Okay, here's what we have: Ryan Jones fixed ratio on our auto trades with the striker. Okay, and how it works is you open a futures trading account with Striker. They are a futures broker. I am not. Okay, so what happens is I give them my trades and they trade my trades for you in your trading account with them. Okay, and here's all the contact information for that. It's going pretty good. We got the ES and we have the E-minis, and I think it just got approved to do futures. I'm sorry, to do options. And I like, believe it or not, the 0 DTE options for hours or minutes even. They can be quite rewarding when you're right. But anyway, just got approved for those. So that would be a lot more short term, and these would be more long term. Obviously, the ES would be long term, the micros would be shorter term, and the options would be even shorter term. Okay, but anyway, so much for that. Here's that S&P Cash weekly bar. There's those targets. We got the two different wave counts, one in purple, the one in black. And it looks like the purple one is played out, this expanding triangle. They hardly ever work out, but we'll see. It's in play. Okay, there's our targets printed out. Okay, there's the 382 at 49.43. And I don't think I have it on here. And then the 48.18 is the make or break. It should not go above this wave 1 high. We're talking about wave 4 in parentheses down to correct this. And again, there's that fourth wave of one lesser degree of trend. Let me make sure I got that. Let's go back here to the S&P weekly. Yeah, there we go. There's the 382 at 34.91 right there. I don't have that on there. Let me put that fib retrace on there. Still a magnet on there. Make sure we get this. I thought I had that on there. There we go. That'll get it right there. Yeah, and this 382 for this wave 4 in parentheses would be at 49.52.76. And there's the fourth wave of one lesser degree of trend. Okay, for what it's worth, the 50% is 46.32 and the 618 is 43.33. Obviously, this high on 218 of 61.47 needs to hold. Okay, back to the report. Okay, that's that there. There's all the verbiage to that. All right, and here's our Fibonacci time spiral. We have two of them. One that we took through the December 7th. The next one would be 233 days. Would be a longer way out, so we'll deal with that in the future. This one had barely any slippage and had a turn date of 12/7, which was a Saturday. And of course, the market did the best it could because this is on the S&P cash, so it topped the day before on Friday, 12/6. You can see all the turn dates here. We have a high followed by, well, a start followed by a low, then a high, then a low, then a high, then a low, then a high, then a low, and then a high, and then to end it, another high. Okay, so it was doing alternating highs and lows till it got to the last turn date and made a high on December 6th. Okay, so we got this kind of split in two. Here's one Fibonacci time spiral from the July 16th low into that December 2024 high. And then we have another one here that started right where that one left off on the 12/7 high and going all the way out to March 6th. And this one had two consecutive lows to start and then alternating high, low, high, low, high. Okay, so here we go with this one starting from that 12/6. Again, we got a low, high. There was two highs in the beginning, then a low, then a high, then a low. I don't know if I got them all marked. And then a high on 131, and the next one in the sequence is March 6th. Okay, I got it marked right here. And this is that black wave count that we went over on the live chart, okay, which counts this as a 1 and a 2 and a 1 and a 2. And we've got the alternate in blue with the ABC correction there. Okay, there's our black targets there. We're going to watch this play out with a lot of interest. Starting tonight with the futures at 6. Okay, and this is all the verbiage there. Here's our NASDAQ. All right, here's that composite there. There are our targets. And it's not on this chart, but this move down from the high in 2021 was 5 waves with no overlap. The other indexes had an overlap. We had to call that move down a leading diagonal. Now you know we were looking at an expanded flat. I like the NASDAQ count better. And then we got a pure 5 waves up here. And we have a little overshoot right there. So we'll see how that plays out. Again, we've got the retracement of the entire 5 waves up from this October 2022 low. And then retracements here on just the most recent 5-wave advance from the August 5th low. Okay, and we can, let's just zoom in on that. We'll go back. You guys can see those numbers a little better. There we go. They're a little bit blurry, but the retracements for the move up from the August 5th low are 18,487 and 17,956 and 17,426. And then the retracements for the retracement targets for the entire advance from August 5th are 16,340, 15,146, and 13,953. Let me get that back to smaller. There we go. There's the Dow. I think we went over that. That's pretty clean 5 waves up. We'll see how that plays out. That had a little overshoot also. Okay, let's get to the bond market. I think we've explained that pretty good. We've got all 3 or 4 degrees of trend there. We've got direct hits, a lot of them going back off of the screen to the left. And that's what we're looking at. Where is it right? Where is it wrong? We're going to watch this real closely. It's hard to believe that we'd have a 4th wave at 4 degrees of trend, but if that holds, we do. If it doesn't, it's not the end of the world. It just means that lowest degree of trend is negated, but the other 3 are still alive and in play. So interesting to watch that play out. Okay, that's interest rates, and there's all the verbiage there, all of our triggers and targets, a lot of direct hits. And then there is the gold. We went over that. That's that 5 wave. We got a 1 up, 2 down, 3 up, 4 down. There's our 5 targets, and it's within less than 50 points of the 3,000 mark. So interesting to watch that. Kind of excited about that too. There's our targets. There's our triggers and targets on all those. There's our disclaimer, and there's all that. I think that pretty much does it. I want to leave you guys back with this ES on the daily here, okay, and then the ES on the hourly. And if I can show, oh, I wanted to give you guys that last report on Friday. Okay, I don't think I went over this, but it's mostly a review. But here's the daily and the hourly next to each other. Here's the daily, taking it from the 12.6 high. Okay, and then the hourly takes it from this 61.66 B wave high down here, okay? And I think that's about it. Oh yeah, steps needed to confirm a change in trend. We got them at the smallest degree of trend, all 5 of them. Now we need to see them at the next degree of trend here, which is the minuet. That was the sub-minuet above. Okay, I think that is it. Yep, there's all those triggers and targets that were hit and activated. And here we go there. I'll leave you guys with this. Sorry for the long delay between. Had a lot of heart issues and ongoing. Hope to get that surgery soon and be back in the saddle. All right, until next time, take care, everyone.